What's going on, traders? It's Edward, Deadly Crypto here. In this video, we're going to be talking about emotional management, trying to develop a trader's mindset. A lot of times traders talk about the technical aspects that go into trading. That's because there's a lot of technical analysis that does go into trying to determine how to plan a trade. There's a lot of things to consider technically before you should put your money into the market. But there's also a lot of emotions that come into play whenever your trade is live and your money is actually in the market. Generally speaking, it's easiest to manage feelings if you take the set and forget mindset. This means you'll set your entry, take profit and stop losses all at the same time and do nothing until one or the other fills. While it's easier to contain feelings this way, it's not exactly the most promising as far as profit potentials will go. But taking a dynamic trade means you are adjusting take profit targets and stop losses along the way, which can be more mentally daunting, but also more rewarding if you manage it properly. You can exit a trade early or ahead of your initial projections at any time to cut losses or preserve profits. Even if your take profit goal was not hit, profits are profits. Even if your stop loss was not met, it's best to avoid losses if you deem the market is going against your trade idea after an entry. So one emotion that is very prominent when it comes to trading is fear. Traders become fearful of the market usually for one of two reasons. Some are new to trading and have no idea what to do, so they don't do much in fear of losing their funds. Another reason is a trader may have experienced a significant loss in the past, and now the trader does not take risks that could have been profitable. In order to remove fear from your trades, you need to make sure you are managing your funds properly. You should never invest more money into the market you can afford to lose. Plain and simple. If you know you can survive losing whatever you trade with, then you'll be less worried about losing money and more capable of taking calculated risks. Your account will start to grow quickly once you've deleted fear. Greed is another prominent emotion when it comes to trading. Have you ever heard the old saying, bulls make money, bears make money, and pigs get slaughtered? This refers to market cycles and traders, meaning if you're greedy with your profits, you'll more than likely lose your money. Without realizing it, traders get greedy when their trades pass their profit targets and they remain in the market. They think that since the position is in their favor, it will continue to be in their favor. Let me tell you, the markets can fall as quickly as they rise. If your take profit goal is achieved, that means the trade did exactly what you thought it would. Why would you want to leave that position open? If your profit target was met, you should close the deal and look for the next trade setup. Don't get greedy with your profits. Take your profits and live to trade another day. Revenge is something that arises in a lot of traders. So sometimes when a trader suffers a loss in the market, they'll get feelings of revenge, sometimes without even being aware. Losing anything does not typically produce a good feeling, and losing funds can sometimes create a vengeful desire for more. Quite often, an inexperienced trader will try to recover a loss quickly, only to be met with another loss due to lack of planning. As a trader, you have to understand that you will lose out on some trades. Not every trade will go the way you want it to, and that's completely normal. Instead of getting upset, try to take a look at why your analysis was wrong and use that information to set up a better trade next time. Euphoria is something that fools a lot of traders. Perhaps the easiest way to lose your money is in a time of euphoria. When traders take a big profit or are successful in a series of trades, they can become overconfident in their trading abilities. This can lead to poor risk management and can send a trader into emotional disarray. When a trader gets too comfortable winning, he might forget what losing feels like. There isn't a single trader on earth with a 100% win ratio. Every trader will take a loss at some point, and you never know which trade it will be. It's best to keep calm and collected when you're becoming more consistently profitable so you can properly manage your resources. It's not difficult to achieve a trader's mindset, but it will take time. If you're new to trading, you must accept that the markets do not care about you. The markets are going to do what they will regardless of what you want or how you feel. You need to learn to use technical analysis to predict the market movements. You must also develop a strategy or a few strategies that work for you. After you've established your risk to reward ratios, do not break them for any trade. If you stick to your plan, when you get to the markets, you'll be ready for whatever comes. You'll be able to trade without emotions, and you will start to see more consistent results. So that's it for this video. I hope it was helpful. If you haven't watched any of the other videos that led up to this one, like charting market structure, using indicators as confirmations, multiple time frame analysis, or managing risk, go check them out. So that way you have a full understanding of what goes on when it comes to trading Bitcoin and trading other cryptocurrencies.